I think we're live. I forgot how to do this. Happy Friday the 13th, team. It's been a minute. Your boy's back. Where have I been? What am I doing? I've been doing Reels. So Reels, shorts for the YouTubers. LinkedIn, you ain't got nothing from me for a while. It is what it is. Holidays, sicknesses, craziness, absolute craziness going on. I got news for you, especially in San Diego County. I can't say this for Riverside, Temecula. I can't say this for that area just yet, but I can tell you for San Diego County, I'm calling it. You heard it here first. And I've told you this was coming. I told you this was coming for months now. Months I've been saying this buyer's market is not going to last long. It's heating up. It's heating up. The underlying tone, the pent-up demand is so significant. It's hard to explain, and there's no way to really measure it. There's no way to really measure the pent-up demand. I wish we could get a figure of just some data around how many people there are who are pre-approved or who have been pre-approved that didn't buy, let's say a year ago. And remember I told you when we come around to the first of the year, there's going to be a bunch of people who at the beginning of last year bailed because the market was still too hot. They signed 12-month leases, and guess what they're doing right now? Guess what they're doing right now? Problem is we have no homes for sale. We now have an inventory situation again. So guess what that means? That means now that if home buyers are going to get the home they want, prices are going to have to come up. Sellers just aren't interested to sell right here. I have multiple deals that I thought were going to get in escrow this week. They didn't. Why? Bid and ask, too much delta, too much difference between where they were. And we're talking $40,000, $50,000, $60,000. Buyers have been lied to by the media. They've been impressioned by the media to think that there's some crash coming and that if I hold out, prices will get better. Well, I have bad news, and I hope that you don't shoot the messenger. It's over. The buyer's market is gone. Gone. We have homes over here in Carmel Mountain Ranch selling for $100,000 just recently. I mean, in escrow in the last week. You're not going to see the comp because it's not sold yet. In escrow, $100,000 over ask. And it was priced where it should have been. Okay. We've got, I know a lot of people who have listings are like, yeah, my listings are getting blown up. Buyers who wait, they're like, oh, hey, there's no offers. Oh, let's put an offer. Oh, no, let's kick the tires for a little while. Let's look at it again. And then let's bring our mom and dad by. And then, oh, they got 3 offers all of a sudden. That's happening now. So I'm just telling you, the buyer's market is over. It's over. Now, for San Diego County, for sure, it's done. But there's still some areas in Riverside County, Temecula area, Winchester, French Valley, where there is still some softening going on. Buyers might be able to get some deals in some of those areas. I don't know how much longer that's going to last. Rates, I've got rates pulled up here. Now, my rate's a little bit lower than this. VA rate today, 5.375 for me. So now I'm about 0.5% below this. I actually quoted a 5.25 on a VA condo today, conforming balance. 5.25. People don't realize what you're going to see here is we have no inventory. The seller's not willing to come down. Rates dipping. People on the cyclical nature of this. What's happening is we've got people who have put buying a home on the shelf, and they're coming back around the bend on top of the pent-up demand we already had. That's why there's no inventory. That's why you're starting to see competition. That's why I've got so many buyers who've been trying to buy for weeks, and they can't. We're almost back. We are so close to it being absolutely cray-cray again. And this isn't necessarily good. If you're a realtor, for example, look, I warned you about this almost exactly a year ago to the day. 2 weeks from now, it'll be a year. The pie has shrunk. There's less transactions. There's less transactions because at the lower prices, there's not enough sellers. And so we have that. When you see price go down and volume decrease, okay, that's a bullish divergence. That means that prices need to go higher. They just need to in order for the market to work because there's no sellers down here. You have some sellers, but you don't have a ton. And the ones you do have now, buyers are overwhelming the situation again. If you're an agent who's working open house this weekend, I guarantee you're going to be busy. Now, if you have a $4 million listing or something like that, maybe not. But if you're working a working class neighborhood open house this weekend, you're going to be busy. I have a good friend agent of mine who's got this insane listing in Oceanside. It is like I think it's the price point is like $550. No HOA. It's gorgeous. Look, completely remodeled by the owner, is a construction guy. VA, FHA approved. I'm like, are you kidding me? You're going to get run over. Run over. VA buyers should be around the door, around the corner for this one. So when you look at rates here, so VA there, conventional, this is about right. Right around 6. I quoted a couple high 5s. Usually about a quarter less than this, but these rates are decent. We're going to talk about a couple of things today. And I'm going to run through a whole bunch of stuff on the investment side of things. So you get to the end, just look at the market, the DXY, what's going on with the dollar. We'll talk about the stocks that I'm invested in right now, which would be Meta, Tesla, and we might look at oil too. We'll see. But we'll definitely talk about Tesla as I'm accumulating there, and Bitcoin. Hello, 20,000. We're back. If this is the web, so I think it is. Y'all are amazing. I love y'all. Thank you so much for your kind words. I'm live right now on YouTube, LinkedIn, Facebook, a whole bunch of places, Twitter, you name it. You're very welcome, Slim. And so if you want to drop a comment, ask a question, feel free to do so. I'm going to be breaking down a whole bunch of stuff. And this is not a victory lap. It's not. I know it always seems like it is, but that's just because I've been right a lot. And I'm not bragging about that. I'll admit when I'm wrong. 100% of the time when I'm wrong, I will admit it. Hey, I got that wrong. Right now, I've never been so sure about anything than this real estate market is. It is a race car in red right now, and it could explode. If rates dropped 0.5%, it'd be complete bananas. And we're already, what momentary time we spent in buyer's market is behind us. It is now flipped straight back to a seller's market again. And rates haven't even gone down that much. I mean, maybe from the absolute peak, which lasted a week or two, but they haven't gone down that much. I mean, we're still looking at 5s and 6s here. So, all right, here's the map. Inflation this week. This week's economic data was very bullish. You can see the action in the stock market. I mean, everything from the very beginning, everything inflation-wise was either in line or better. Consumer sentiment was better. Just sort of everything's better than expected. And that's really what it takes to move things. Like expectations are everything. And when I talk about Tesla later, we're going to really talk about that, expectations and how that kind of folds into everything. Here's what the whole thing looked like today. This is the S&P. We did mortgage rates, mortgage bonds. Lost a little ground in mortgage bonds today, but mortgage rates still doing really well. Why is that? How could that be? Well, banks they can see the trend here. You know what I mean? And it's a competitive market. There's less units out there. So banks are fighting for units. Inspectors are fighting for units. Title and escrows are fighting for units. Loan officers like myself, we're fighting for units. Everyone's trying to find and fish in this pond that's got less fish than it normally does. And so everyone's being competitive. Well, you can see here, the action is pretty obvious. I mean, the channel that's being formed right there, this is not a good graph. I don't have my MBS Highway subscription set up yet. I need to, sorry. You've got a very nice channel there. It looks good. It's pretty clear. Writing's on the wall. Bond buyers are back. Inflation headed the right direction. Fed going to slow down the increase in rates. All these things are on the wall. It's all there. So it doesn't take a genius to know what's going on. Let's jump into, where should we start? Let's go with the dollar. So here's the dollar index. This has pretty much been the big driver of everything. Remember when we were at 114? I can't believe I honestly didn't think I was calling the exact top. When we were at 114, which is right here, that was when I said, hey, we should be rotating dollars, okay, rotating out of dollars and into assets. Assets could be real estate, anything that's priced in the dollar. So that could be, stocks, gold, whatever, anything that's priced in the dollar you want to roll out of if you believe that the dollar index is going to come down. From 114 now down to 102. And it looks like we're even about to break out. We have broken out technically. If we look at that, if we zoom in on that, we closed the golden cross. That's actually a great short opportunity right there. And this thing looks like it's about to plummet. And if it does, what's going to happen is you're going to see stocks take a crazy run. You're going to see crypto make a crazy run. Talk about crypto here in a second. Why is Bitcoin absolutely nuking right now? Bitcoin, oh my gosh, maybe we need to talk about Bitcoin. Holy smokes. This is what Bitcoin does. Why is this happening? Why is this happening? So we're up $1,000 today in Bitcoin. This is the new candle. It's already up 1,000. I mean, what is going on here? Looks like we're testing this. We're out of this downward channel now. Looks like we're going to go test this right here. What's going on? Well, here's what's happening. So pretty much, and this is one of the things about the way markets move. And I tried to explain this to everyone about the real estate market. When you have all the bad information is already on the table and there's no sort of scenario where you could get more new bad information, then that's the end. That's the bottom. That's the bottom. And when you look at what's going on with the crypto community, all the worst news you could have imagined and then some has happened. FTX, one of the biggest exchanges, the one that we thought was going to save everybody, failed. I mean, Tom Brady lost hundreds of millions of dollars. Binance is in question. Gemini is even having trouble. I had to pull my investments from there. Fortunately, I did that a few days ahead of time. I hope you guys saw that post that I made about that if you were invested in it. So basically, everything that was bad that could have happened. And so once that happens, you have a bottom. There's no more new bad information. Now, here's what's interesting. Republicans have the House, and they are moving to regulate crypto. As Michael Saylor's been saying, as I've been telling you, regulation in crypto is important because once you have the regulation in crypto, then now institutional investors can come to the table, particularly international banks and reserve banks. By the way, BIS meeting notes, and I'm going to post a link so you can watch this for yourself or read this for yourself if you'd like to. But global reserve banks fought regulators to be able to hold more crypto on their balance sheets. So they can't hold crypto on their balance sheets until 2025. If you're thinking about selling your crypto right now, I'm telling you, if you never listen to me about anything, don't do it right now. Do not sell your crypto. If you don't want to buy it right now, that's fine. Do not sell it right now. I kept Slim's comment up there for a minute. Do not sell your crypto right now. International reserve banks who are regulated fought regulators to hold more crypto. So regulators wanted them to only be able to hold 1% of their total holdings in crypto. They fought for at least 2%. We know they got 2%. They're going to be able to hold up to 2%. They can't until 2025. Okay, so January 1st, 2025, the game changes completely. Almost no one knows this, and almost no one is talking about this. They fought for at least 2%. Maybe they were fighting for 5%. We don't know. They ended up with 2% after the offer of 1% from regulators. So they duked that out. Why would these reserve banks, why would these huge banks want to hold so much crypto? And then it's only 2%. It's not that much. But if all these banks actually end up holding 2% crypto, holy moly. All the stories people have been telling you about Bitcoin being 100,000 or $1 million and all that stuff, all that stuff starts to make sense. Okay? Don't sell your crypto now, whatever you do. What's up, Gary? I see your question, so I'm going to get to you quick before I touch on this again. You think a return to a seller's market would cause the Fed to further reduce their balance sheet and roll off MBS? I don't think the Fed cares about whether real estate is in a buyer's or seller's market. I don't think they make any decisions based on that. I think they just look at, inflation and employment, and pretty much that's it to make these decisions. I don't think they would go, oh, well, the market's heated up too much, so now we're going to do something over here. They're already on a very aggressive course right now. I think if anything, the opposite happens. Because remember, they don't do it right. You're giving them too much credit, Gary. You're giving them credit that they would actually do what's prudent and what makes sense and it's logical. No, they're always a day late, dollar short. They're always doing the exact wrong thing. They were stimulating the economy when it didn't need it. They ran us up to crazy places. They shit on the economy when we didn't need it and made things get worse than they should have. I mean, what we just experienced, this very, very mild recession we just experienced, didn't have to happen. Or certainly didn't have to happen like this. It's not that it's bad for these things to happen, but when you have someone who's puppeteering it and they're supposed to be there to fix it, but they're constantly on the wrong side of the trade, at some point you got to go, what are these bozos doing? And do we really need them? So don't give them so much credit, Gary. Don't think they're going to time it right. They won't. They're always late. That's the problem with bow tie guys. Anybody who's a data guy, they're always like 6 months behind. How could they not be? Because they have to look at all the data and then make decisions. Oh, okay. Well, based on that, okay, maybe that was right 6 months ago, but what about today? They don't think like that. They don't act like that, and that's the problem. So this, they're going to regulate the crypto industry. It looks like this House majority, they're going to get in there and go, okay, crypto regulation, industry oversight, pressing issues, and the FTX collapse is going to give them a good reason to do that. Going to give them a very good reason to do that. They're going to do it. And so that, in my opinion, is why we're seeing this nuke higher for Bitcoin. Now we had this, I've been showing you, hey, this upward channel. I really thought we were going to get to the 19. Last time I did something on this, I think I thought I said we're going to get to about 19,000 is what I thought based on this upward channel. Then maybe we'll reject again, and who knows? We just blew through this channel, and then this downward trend line right here also blew right through that. So as of right now, from a technical perspective, there's massive buying going on, and it's just sort of. It doesn't mean that it won't dump. I mean, tomorrow this could be back to 18,000, back into this support area here. It's totally possible, especially with Bitcoin. You never know. But the reason why it's running up is because regulation's on the forefront. The bad news is behind us. By the way, again, what I was discussing earlier, international reserve banks will be able to hold, and in all banks that are governed by global reserve banks, they will be able to hold up to 2% of crypto, but they can't until 2025. So 2 years from now, 2 years. And 2025, 2026, 2027 are going to be very interesting years. Don't sell your crypto. That's all I can say. All right. I should say don't sell your Bitcoin. There's all sorts of cryptos that are crap out there. All right. We did that. Talked about that one. This one. Okay. Let's go to Tesla. A lot of people have been talking about Tesla. They've cut prices on some of their more expensive models, the Model Y, I think it is, or the Performance Model 3, or not 3, the Performance Model S, something like that. With their more expensive ones, they cut the price by like 13,000. What I see in that is like they're just trying to keep volume on. They're just trying to keep putting Teslas out there. They crushed, 2022. 40% more deliveries than 2021. That's sick. Absolutely murdered every other car company. I mean, destroyed, despicable, like not even on the same planet, not playing the same sport. The numbers are ridiculous. But the stock has suffered significantly recently. Why? Because Elon Musk bought Twitter. You think that's a good enough reason? You guys don't understand. Elon does not run the day-to-day at Tesla. He never has. Does he do hardcore engineering for Tesla? Does he help them, make big decisions? 100%. But is he running day to day? No, he never has. Same people. Got the same people doing the same thing. So when I look at the stock, now I've been accumulating this since 150. So I waited till we got about right here. 157 is when I first started buying this. And I'm waiting. Here's what's going on. So earnings for Tesla coming January 25th, which is not this coming Wednesday, but the Wednesday after that. I'm trading lightly until then, buying small amounts because I do believe we could see a capitulation event. Most likely, guidance is going to be that, hey, this is, we're okay, but we think we're going to have a down year in 2023 versus 2022. If there's a lack of growth there, it's already priced in. You can sell, the stock's down 75%. So it's really priced in my opinion. But you could see a capitulation. You could see some fear. You could see some selling. It'll probably all happen in the same day or two. And then the bad news behind us then should shoot up. So I'm kind of waiting for that. I've got a bunch of bids in on this. Just full transparency, not a financial advice. You do whatever you want. I'm just telling you what I'm doing. I've got bids in at 110, 105, 100, 95, 90, 85, 80. So if I get lucky and we gap down or something like that to like 72 one day or something, I'm going to get bids filled like crazy. A super low price. If we just kind of wick down or something like that, then I'll get filled. But that's my strategy on this one. Just long term, I want to hold this stock for a decade plus. So I'm not too worried. I don't need to rush into it or anything. But you can see we're facing a couple things here. And this is a daily chart. Let me just go ahead and turn off the volume profile here. Got a daily chart here. And the thing that sticks out to me, this was obviously the cascading, the cascading downtrends, which we just broke this one. Okay, that's pretty handy. Broke that guy right there. I could say we're safely on the other side of that. I do think if you look at the way this lines up, nice resistance area right here with a 618 right in that golden pocket. I do think we're going to see this at some point in this cycle. If we don't break these lows and just create whole new charts out of this, then we're going to see, 160s in the not too distant future. For example, if if earnings and the next earnings call are actually a catalyst higher, then that's going to be our first stop. That's my guess. If it's going to be a catalyst lower, it's possible that we could see Tesla sort of creep up to this area between now and then. What do we got? 8-9 trading days, and then reject from there. So we'll see. We do have this downtrend to deal with. I'm really expecting, because if you go back and you look, and this is where it really gets convincing. Let's go back 3 quarters. So the earnings estimates were 95 cents. They reported 107. Or sorry, the estimates were 70 cents. They reported $1.07. So crushed it. Estimate was 60 cents. They reported 75 cents. Crushed it again by 25%. And you had the stock split. Then the estimates were $1, and they came in at $1.05. So just barely. That didn't help. So that coinciding with potential for recession, potential for a slower 2023, Elon taking over Twitter. People think he's distracted, like that matters to Tesla, which it doesn't. That's the reason why you've seen the stock get blasted. Now, what happens on this? Now the estimate expectation is $1.16, which is possible. They may even meet that. The question is, how are they going to guide? Are they going to guide that, hey, we're expecting it to be a bad year. Hey, the next couple of quarters are going to be bad. Hey, this year is going to be, we're going to recede this year. We're not going to grow this year. If that's the case, then I think, you're going to see a wick down, and we're going to see capitulation. And that's going to be the ultimate buying opportunity. My 2 cents, you do what you want to do. I haven't been looking at Ethereum much. The Ethereum that I own is just sort of set it and forget it. I'm not accumulating Ethereum. I'm accumulating Bitcoin. It's doing similar thing here. Retest has now gone past the 702. So this has been invalidated. And it's just in the same kind of arc that Bitcoin is in right now. And if you own these things, you're watching stuff go up. It's pretty sweet. Let's see. We want to do S&P, did the dollar. S&P. Okay. So S&P is on the verge. Remember this? How long have we been talking about this bearish horn? I mean, these are daily candles. This has been months and months and months of this bearish horn. And look, we've tested the top of it twice, tried to break out of it, couldn't close above it. And right now we're up against it again. The bad news is, team, today we closed, and we don't know exactly what this means. We closed today right at the 702. The 702 Fibonacci is like my secret sauce. It's no one knows about it, but the algos do. It shows up all the time on charts. And so the S&P closed right at the 702, which is also intersecting with the bearish horn downtrend. So that's not necessarily great. I would say that probably means the higher probability we reject here and go lower, but you never know. You never know. We could like gap up and just run away from this damn horn that we've been in for months and months and months. Just note, buyers have tried twice, tried once, tried twice. Then we have big consolidation accumulation area right here. I mean, that's the thing that makes me probably the most bullish about this scenario, because I'm very split on this. Is that you see the accumulation here. It's a nice accumulation zone. We've run up hard from there. Gap up right here. Ugly candle. Don't care. We're taking it higher. So it's possible. Now, if the Dixie does what I think it's going to do, if the dollar index does as we were showing you earlier, this is actually a great trade setup if you were trading this. This retest here, when these crosses happen between trend lines, those are the best entries. Especially here, you get the, this bearish candle, this engulfing bearish candle. And then on the next one, boom, right there, that would have been the entry right here for the short. So this should nuke lower. And if it does, you're going to continue to see Bitcoin run, Ethereum is going to run, the S&P is going to run, and just run wild. So maybe it depends what happens over the weekend, because the Dixie is going to play. Stocks aren't going to be traded over the weekend. The Dixie will be. Currencies will be. So we can just kind of see what happens with the Dixie. Maybe that'll give us a clue as to what's going to happen with stocks. But so far, I tell you, we've gotten to that point where I think the sentiment was as bearish as it could be. And I think that point is now behind us. That's not necessarily true with real estate. Here's what's really wild. We started this off by me saying that the buyer's market is over. And it is. Buyer's market's over in San Diego County. It's over. One of the things that's really crazy about that is that a lot of buyers are still waiting for lower prices. So what we have is we have pent up demand. Some of it's coming to the table. We have no sellers. And there's people who are actually want to buy, and they're sitting back thinking they're being smart, waiting for prices to come down. What are they going to do when they see prices go up 10% this year or 15? What are they going to do, mid-year when they finally go, okay, you know what, let's get out there, start looking at stuff. And then they start getting outbid and it's crazy again. Are they going to go, you know what, screw this, we're going to Tennessee, screw this, we're renting, or screw this, pay them $100,000 over list? I'm not sure what they're going to choose, but we're going to be back in that situation again here before long. So everyone who held their nose, bit down on their mouthpiece and bought some real estate when it seemed ugly, you may have not gotten the best rate that you've ever gotten, but I'll make you this promise. You'll have a chance to refinance. You will. I don't know if it'll be 6 months from now, a year from now, or 2 years from now, but at some point in the next couple of years, rates will be low enough. If you keep your same credit profile, you'll be able to save some money. Let's see one here. Gary, I live in DC, work in politics, a lot of spending from mainstream bank lobbying for additional crypto regulations. See Fidelity adding crypto for their customers. Yeah, 100%. Thanks, Gary. Live in DC and work in politics. Gary, I don't know if to congratulate you or to tell you that we need to get you into a more zen situation, man. But I appreciate your comments. So there is a lot of spending, mainstream bank lobbying, additional crypto regulations. Crypto regulations are good, because what the regulations do is they allow for institutional ownership. And that means big companies, big banks, the global, international reserve banks will be buying crypto. What crypto do you think they're going to buy? They fought to buy more. What is it that you think they're going to buy? You think they're going to buy Ethereum? Probably. They're going to buy Bitcoin? You think they're going to buy shit coins 3 through 100? Probably not. Unless they have some sort of insight, right? If they're building an application, or they are financing a company who's building an application that uses, let's say, Cardano, then it would be wise for them, right, to go, you know what, let's buy a few billion in Cardano. We know there's something huge in the works. It's like insider trading, right? But it's not illegal. So, yeah, I think there's going to be things like that that go on. And so it doesn't necessarily mean that, Bitcoin and Ethereum will be the only things that they buy, but they're going to buy things strategically. And you're going to start to see crazy moves. And that will be, I think, the spawn of the next bull market. By the way, also coinciding almost perfectly with, you got it, if you're a Bitcoiner, the next halving. What happens after the halvings? Bitcoin goes higher. So expect that too. Expect it. It's probably going to happen. Okay, let's see. Is that all the ones I had to get to? Republicans, Tesla, Moynihan, Bank of America says that he's expecting mild recession. JP Morgan, same thing. Hey, and this is part of what here's what I was going to say about this. JP Morgan tops estimates for fourth quarter revenue. They always do. They never lose, right? Banks always win. And so what I was telling you early on in the recession, which we're still seeing now, is everyone's preparing for the worst. When people are prepared for the worst can't happen, because the worst means you're not prepared. And then bad stuff happens. When you're prepared, the worst can't happen. And people were very prepared. We were very aware that things weren't right. We were very conscious as consumers, as homeowners, as home buyers, as borrowers. We were very understanding that something wasn't right and we needed to relax. So we didn't go as crazy as people have in the past. The regulation that was put in place, I will remember, I'm not just totally anti-government. The governmental regulation that was put in place, CFPB, as ridiculous as some of the things were, it did work. It did work. It kept a lot of crappy loans, a lot of crappy practices, most importantly, the bond ratings agencies in check. And that's what screwed everything over last time. So this is not my victory lap, but it's coming soon. And if you don't see what's about to happen here, if you still think that home values are going to go down and there's going to be all these foreclosures and stuff, just be careful where you're getting your information. Okay. A lot of people out there talking a lot of crazy things, have no idea what they're talking about. That doesn't mean that certain markets won't do well. You know, we've seen some serious price decreases in some of these second home markets, the Boise, Idahos, and places like that. I'm telling you, San Diego County, we are 1 percentage point, maybe less, in rate drop away from being absolute cray-cray again. Absolute cray-cray. We would actually, prices would go up to a point where there would be sellers who would come in and we'd have a bananas market. But prices would be much higher than now. So take what you want from that. All right, I haven't done this in so long. I don't even know what to do right now. I don't even know what button to push. Where's my thing at? I will be around this weekend. That's right. I'm fighting for units too. I got kids, man. Help me out. I will hook you up. I will hook you up. We will not charge you any lender fees. We will give you a wholesale interest rate on your mortgage. Call, text, shoot me an email. If you want to buy or refi, got your back. Have a great weekend, team. I'll see you soon.